Between February 2025 and early 2026, you probably paid more for stuff you bought online than you should have. Not because of inflation, not because of supply chain problems. Because the US government slapped illegal taxes on imported goods, collected $175 billion from importers, and then the Supreme Court said those taxes were not legal. Now the government is returning that money. Amazon just got a $600 million check from that pool, and you are probably going to get nothing. On July 30th, 2026, Amazon's chief financial officer Brian Olsavsky told analysts on an earnings call that the company had received roughly $600 million in tariff refunds from the US government. He called it the majority of refunds we expect to receive. That means Amazon does not expect another $600 million. $600 million, flowing back to one of the most valuable companies on Earth because the Supreme Court ruled that the tariffs Amazon paid were illegal in the first place. So how did this happen? In February 2025, President Trump signed an executive order imposing tariffs of 10% to 25% on goods from dozens of countries. That law lets the president block financial transactions during national emergencies. It does not let the president impose taxes on imports. But that is exactly what Trump did. A phone case that cost $12 in January 2025 might have cost $14 by April. A blender, a set of wrenches, a kid's toy, a USB cable. The tariff was charged to the importer, but the importer passed the cost along to you. By December 2025, more than 301,000 US importers had paid $175 billion to the Treasury. On February 20th, 2026, the Supreme Court ruled 6-3 that the entire EPA tariff program was illegal. The government had to stop collecting the duties and start returning the money. Amazon says it will pass some of that money back to customers in what Olsavsky called a limited set of circumstances, where it can trace specific import charges to specific purchases. In those cases, Amazon will automatically issue refunds. No form to fill out, no phone call to make. But Olsavsky also said most customers never paid separate import charges. Amazon largely absorbed the higher costs, he said. And that means the refund for those products stays with Amazon. This is not a new story. The fight over who pays tariffs and who profits from them is older than the income tax. For most of the 19th century, tariffs were the federal government's main source of revenue, and that made the tariff schedule a magnet for corruption. If you were a steel baron or a sugar refiner in the 1880s, getting your product's tariff rate raised by a few percentage points was worth millions in protected profits. The McKinley Tariff of 1890 was the high watermark. Named after Representative William McKinley of Ohio, it raised average import duties to nearly 50%. Every Republican congressman traded votes to protect the industries in his district. Wool growers got higher rates. Tin plate producers got a tariff. Sugar refiners protected their margins. And the public paid higher prices for everyday goods. The backlash was swift. In the 1890 midterms, Republicans lost 78 seats in the House, and McKinley lost his own race. The most famous tariff disaster came 40 years later. The Smoot-Hawley Tariff Act raised tariffs on more than 20,000 imported goods. President Herbert Hoover signed it against the advice of more than 1,000 economists who begged him to veto the bill. Henry Ford called it an economic stupidity. The chief executive of J.P. Morgan said he almost went down on his knees to beg Hoover to veto it. He signed it anyway. The retaliation was immediate. Canada imposed new tariffs on products that accounted for roughly 30% of US exports. France, Italy, Spain, Argentina, and others followed. US imports dropped 66%. Exports fell 61%. World trade shrank by about 66% between 1929 and 1934. Unemployment, which was 8% when the bill passed, hit 25% by 1932. Economists still argue about how much of the Great Depression Smoot-Hawley caused versus worsened. But the lesson stuck. When you tax imports, your trading partners tax your exports, and everyone ends up poorer. 3 things carry over from that history to today. First, tariffs are always sold as protecting domestic industry, and they always end up costing consumers more than the protected industry's gain. Second, The political backlash comes when consumers notice the prices, not when the tariffs are imposed. McKinley lost his seat. Hoover lost the presidency in a landslide. Third, reversing a tariff does not automatically reverse the price increases it caused. The Smoot-Hawley rates were cut in 1934, but prices did not snap back to 1929 levels. The damage was done. Today's IEEPA tariffs were struck down in February 2026, but the prices you paid in 2025 are gone. The refund goes to the importer. Whether it reaches you is a separate question, and history suggests the answer is usually no. If you are learning something here, hit subscribe. It helps the channel reach more people who are getting hit by the exact same stuff. And while you are down there, drop a comment with the most surprising thing you bought on Amazon in the last year that got more expensive. We are about to get to whether you will see any of that money back, and the answer is worse than you think. So let's back up to how this all started. On February 1st, 2025, President Trump, back in office less than 2 weeks, signed an executive order imposing sweeping tariffs on imports from dozens of countries. The legal basis was IEEPA, a 1977 law passed after Watergate to rein in presidential power. IEEPA lets the president regulate international commerce after declaring a national emergency. It was designed for things like freezing terrorist assets or blocking trade with hostile nations. It had never been used to impose broad tariffs on goods from allied and adversarial nations alike. From February through April 2025, the administration rolled out tariff after tariff. Some targeted China, Mexico, Canada, and the European Union. Others were reciprocal tariffs, matching what other countries charged on American goods. The rates ranged from 10% to 25%. The legal challenge came from an unlikely source. Learning Resources is a family-owned toy company that makes educational toys, many of them imported. Steven Waldenberg, whose family founded the company, decided to sue. He said his decision was rooted in a moral obligation shaped by his family's Jewish values. The company argued that IEEPA did not give the president authority to impose tariffs, that the emergency declaration was a pretext, and that the tariffs violated the Constitution by letting the executive branch set tax rates only Congress has the power to set. The Supreme Court agreed. On February 20th, 2026, the court ruled 6-3 in Learning Resources versus Trump that the IEEPA tariff program was illegal. The majority said the statute authorizes the president to regulate international commerce during an emergency, not to impose taxes on imports. Tariffs are a form of taxation, and the power to lay taxes belongs to Congress. The ruling invalidated the entire IEEPA tariff program. The government had to stop collecting duties and start refunding the money. Over $166 billion in refunds are being processed through the Court of International Trade. And the money is not going to small businesses first. It is going to the companies with the scale and legal teams to file claims quickly. Amazon's $600 million is the largest publicly disclosed refund. General Motors expects about $500 million. Walmart and Costco have not disclosed their amounts, but have confirmed they are receiving refunds and plan to pass some benefit to customers. UPS, FedEx, and DHL say they will pass refunds through to the shipping customers, who are mostly businesses, not individuals. To understand what $600 million means for Amazon, you need context. Amazon's revenue over the trailing 12 months was $775.68 billion. Its net income was $135 billion. Its market cap crossed $3 trillion on August 3, 2026. Against those numbers, $600 million is small. It is 0.077% of revenue. It is 0.44% of net income. It is 0.02% of market cap. If you are an Amazon shareholder, the tariff refund is a nice surprise, not a game changer. But narrow the lens to Amazon's retail business, and the picture shifts. The North America segment operates on margins of roughly 3 to 5%. $600 million flowing through to operating income is a meaningful bump for a segment that runs on thin margins. It is the kind of number that can make a quarterly earnings beat look more impressive than the underlying business performance would suggest. The stock chart tells the story. Amazon traded at $149.93 in January 2024. By the time tariffs began in February 2025, it had risen to roughly $220. The tariff period was volatile. The stock dipped, recovered, and then surged after the Supreme Court ruling on February 20th, 2026. From that date through August 3rd, 2026, Amazon returned 35.2%, rising from $210.11 to $284.02. The S&P 500 returned roughly 20% over the same period. Amazon outperformed. The outperformance is not solely about the tariff refund. The second quarter earnings were strong across the board. AWS growth accelerated on AI demand. Advertising grew at double digits. The $600 million refund was a footnote in a report dominated by AI and cloud computing. But it was a footnote that added to the positive tone. So will you actually get a refund? Amazon operates two main retail models. In the first-party model, Amazon buys products from manufacturers, imports them, and sells them directly. Amazon is the importer and pays the tariff. The cost is embedded in the price, but it is not listed as a separate line item on your receipt. You see $29.99 for a blender, not $27.99 plus $2 import duty. Because the charge is not separated, Amazon cannot trace it to your specific purchase. The refund for those products stays with Amazon. In the third-party model, independent sellers handle their own importing. Some of these sellers pass tariff costs to customers as explicit charges. If a seller listed a product at $19.99 plus a $3 import fee, Amazon can trace that $3 charge and refund it. That is the limited set of circumstances Olszewski described. It applies to a narrow slice of Amazon's total sales. The math is brutal. Amazon has roughly 310 million active customer accounts. If the company returned the entire $600 million to customers, each account would get about $1.94. If it returned 10%, each account would get about 19 cents. If it returned 1%, each account would get about 2 cents. The reality is probably somewhere between 1% and 10%, distributed only to customers who paid specific import charges on specific items. For most Amazon shoppers, the refund will be zero. The gap between what Amazon is keeping and what it is returning is the target of a consumer class action lawsuit filed in June 2026. The suit accused Amazon of keeping tariff overcharges, rather than passing them back to consumers. It was filed before Amazon announced its refund plan, which means the July 30th announcement may have been partly a defensive move. The legal theory is simple. If a company charged customers for a tariff that was later declared illegal, the customers overpaid and deserve restitution. The practical problem is proving it. If the tariff cost was embedded in the price and not separately listed, the customer cannot point to a specific charge. Amazon has a strong defense because Olszewski said the company largely absorbed tariff costs. If Amazon absorbed the cost, the customer did not overpay. Amazon did. But Andy Jassy conceded in January 2026 that tariffs were hitting prices. That admission could be used to argue that Amazon did pass some costs through, even if it did not itemize them. The Supreme Court ruling did not end the tariff war. It restarted it under different legal labels. The Trump administration imposed new 10% to 12.5% levies on 60 economies, plus 15% tariffs under Section 122 of the Trade Act, and new investigations under Section 301. The same provision used in Trump's first term against China. On August 3rd, 2026, 25 states sued to block these new tariffs, calling them a pretext to replace the ones the Supreme Court had already struck down. The cycle continues. Companies pay, prices rise, courts get involved, and the refunds go back to the companies, not to you. So here is your takeaway. Check your Amazon order history for any purchase that listed an import charge or customs fee as a separate line item. If you find one, watch for an automatic refund. If you do not, you probably will not get money back. The $600 million is sitting on Amazon's balance sheet right now. How much of it leaves is a business decision, not a legal obligation. One question for you in the comments. Team Amazon earned it or Team Amazon owes you? Drop your pick below and subscribe if this was useful.